What's up everybody? Welcome to the Stocks channel. My name is Corey and today the options expire as smart money is going to be positioning for the next quarter. So the next week of price action is going to be extremely critical to tell us where we're going from here. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.22%, and that is pretty typical of an OPEX day to really go absolutely nowhere, as all those options are expiring and we are going to see where smart money will position from here. So while we did have a flat day, there's not too much to learn from the price action other than the fact that we did get the second day in a row closing below 370. So going into next week, the first thing you should be paying attention to is whether or not we can get back over 370 or if that level continues to act as resistance. That is a long way to drop, so this is something you will want to take seriously. And the only way you should be expecting possibly more upside is if SPY can get back over 370 and hold that level as support. While this does look like a very steep sell-off, I assure you this has not yet been capitulation. And capitulation would very easily take us down to 350 and possibly even lower. Now, while I don't necessarily think capitulation is still on the table at this time, remember the stock market does not care what I think, and you cannot rule it out as a possibility if SPY is below 370. So while this does look like a completed structure to the downside, and I do favor a rally to close the gaps by month end, that is not likely going to be the scenario unless SPY can clearly break back over 370. So if I haven't said it enough times, 370 is your very critical level to pay attention to on SPY. Whether or not you are above that level or below that level should tell you everything you need to know about where we are going from here. So if we do break back over 370 on SPY, you're looking for a retest of this resistance at 385, the gap close at 389, our resistance trend line at 395, and the full gap close at 401. Those are all of the upside price targets and resistance levels, so do expect there to be plenty of bears at those levels because we are still in a very strong downtrend and we are still in a bear market. Now, while SPY is below 350, it's very likely we're just trending down towards 350, so that is the only price target to the downside you need to watch while we're below 370. Also pay attention to the volume, because if you're not seeing higher volume, it is going to be very difficult to capitulate. These low volume days are mostly due to buyer strike, and a lot of people have already sold their positions. So if there is going to be panic selling, it's going to be very difficult to panic sell if you don't own any shares. Jumping over to the NASDAQ 100 triple Qs, we were up 1.22%, and the triple Qs found that resistance yet again at 275. The capitulation support level on the triple Qs will be the breakdown below 270, even though we still do have this support trend line right around 267. So if we lose around 267 to 270, our capitulation price target is down there right around 258. And the critical breakdown to let you know we're on our way to 258 will be this breakdown below 267. Back above 275, it's likely we'll retest resistance at 285. And above 285, look for the gap close at 288. Resistance right around 293, and then the next gap close at 299. And there will be a lot of bears waiting at 299 and also all this other resistance below as well. We're still in a very strong downtrend and a very strong bear market in the triple Qs. So do not get bullish until we see price action start to make higher highs and higher lows. And just like I said on SPY, this does look like a complete structure to the downside. So do not be surprised if we get some type of bear market relief rally into the month end to close the gaps above. In the Dow Jones, we were down 0.39%, and the Dow Jones met our downside price target at 297. So you're looking for capitulation if we start breaking below this level. So your line in the sand for capitulation in the Dow Jones will be this breakdown below 297. But if we do find support at this price target, you're looking for the gap closes above at 302, resistance at 308 and 310, and then the gap close at 314. If we can break all the way through this resistance and get back over 316, it is very likely we will fill that gap at 323. So again, it does look like we've completed a lot of the downside structure and met a lot of downside price targets, so do not be surprised if the remainder of the month of June is a very strong counter trend rally in this bear market. You have your critical breakdown levels for capitulation, so you will want to get risk off if we do start closing below those support zones. On the Russell 2000 IWM ETF, we were up 0.78%, but it really just looks like a dead cat bounce after we broke that support at 165. Your next likely targets for downside would be at 160 and 156, and you're getting a lot more bullish if we can break back over 175. And above 175, you're looking for the gap close at 178 and the gap close at 183.6. There will be bears at every single gap close because they want those gaps to remain open and try to drive prices lower because we are in the bear market with the strong downtrend. So be very cautious as we're getting into resistance, and if you are taking long trades, you will want to lock your profits and not get greedy. The only way you should really be holding on to long positions in a bear market is after the bear market has been confirmed that it bottomed, because we'll see bullish price action and bullish structure, and we have not yet seen that. On the ARKK ETF, we were up nearly 5%, coming right back up to the 5 EMA, but still below resistance at $40 and still in a downtrend in a bear market. Remember, on ARKK, it's likely we're trending down towards the price target at 33.7, and these Bollinger Bands are now expanding, which will allow price action to continue to go lower. Nobody knows where the bottom is going to be on this ETF because it is in such a strong bear market, so do not be getting bullish until we break all the way back over the 52 zone for a couple of days. That is a long way to the upside, so if you're taking long trades, you need to set risk very well defined. And right now, the best risk level on ARKK is right around 36.5, because if we break below that, you're looking for the downside price target at 33. Above $40, look for strong resistance at 42 and the gap close at 43. On the VIX, we were down 5.53%, and the VIX is still trading above 30, so we're still in a highly volatile market, and the VIX is still in a bull trend, trading above all the moving averages. The capitulation price target for the VIX would be up here at 38, and yes, it could go higher into the 40s, but that would be the level where I would start considering the fact that we may have seen capitulation. We're getting a lot more bullish if the VIX starts crushing down below 24, but that is a long ways away, so right now you still need to remain very cautious in this bear market while the VIX is this elevated. On Bitcoin, we're currently up about 1%, still trading above this support zone at $20,000, and this is going to be a very critical support zone because if we break below this level, we will see capitulation on Bitcoin down to $12,000. If we bounce off support at $20,000, we'll likely see a very impulsive bounce to retest resistance at $28,000, and I would expect that to be a very strong resistance zone. So for that reason, we can get more bullish if we close above $28,000, and then the next critical resistance zone will be all the way up here at $35,000. On NVDA stock, we were up 1.79%, and NVIDIA did bounce off of that previous low at 156, and we still have a valid price target while we're in the bear trend down here at 150. If we close below 150, we'll likely see capitulation with the price target down here at 125. And if we break back over 161, look for the next strong resistance at 175 and the gap close right around 181. Above the gap close, we have strong resistance at 196. And if we start closing above 196, it is likely we've seen the bottom and we're getting ready to start heading higher. On Tesla stock, we were up 1.72%, and Tesla is still in the bear trend and still trending lower after being rejected from resistance at $700. So your downside price targets are still a retest of 620, and breaking below 620 should send us to 571. Below 571, we'll likely see capitulation, which could take us all the way back down to $500. And we can start getting more bullish above 700 and 775. Above 775, we've likely put in the bottom and we could start to get a bullish rally, but that's a long ways away, and you shouldn't be expecting that to happen while we're in a bear market and a strong downtrend. On Apple stock, we were up 1.15% as Apple does hold that support level and price target at 130, and so far this could be the bottom on this stock as long as we don't see price action closing below this level. Below 130, I do think you'll see Apple stock capitulating, so this is going to be your very critical support zone. Resistance from here is going to be right around 133 to 134, and if we break above 137, look for the gap close at 142.5. If we can get the bullish breakout above 145 to 146, look for the critical resistance at 150. On the financial sector, we were up 0.29% and we still look extremely oversold, so I would not be surprised to see a counter trend rally in the financials coming off of this support zone. However, we are still in a bear market with a very strong downtrend, so don't get overly bullish on the financials. Expect the bounce to be a lower high before we continue to trend lower, unless we get some bullish price action confirmation. The industrials were down 0.26%, still below all the moving average and still very oversold, so don't be surprised if we see a counter trend bounce from here. The healthcare sector was flat on the day, only going down 0.06%, but a clear rejection at that negatively sloping 5 EMA. However, we are getting extremely oversold in the healthcare sector. The energy sector is starting to see that full-blown capitulation, going down 5.47% and going down in a straight line from the previous 52-week high. This has clearly lost the bull trend, and you should not be getting bullish until we can at least get back over the 50 EMA, because right now we could still go much lower and we still have a lot more downside gaps to fill that could take us all the way back into the 50s. So jumping back over the S&P 500, remember that we are below 370, which is a very critical zone that could send us into capitulation, so be very cautious going into next week and only start to get more aggressive and more bullish if we can close back over 370 and hold that level as support. Remember that I don't necessarily think we have what it takes to see capitulation at this time, but while we are below 370 on SPY, we cannot completely rule it out that we are trying to get down to 350. So treat that level with the respect that it deserves and remain cautious below that level, and make sure you are always using proper risk management in this market. Also, don't forget that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.